Alright, so in this video I wanted to cover Schedule H, the household employment tax form that is included with the Form 1040 every year if you as a taxpayer hire someone that works for you full-time as a household employee, right? So this is either cleaner, house worker, nanny, if you have children, maybe a groundskeeper. What do you need to do if that person is deemed an employee and you as the employer need to comply with various federal and state payroll tax and reporting obligations, right? So the first issue, in most cases, if you hire somebody to do one of these jobs, they're probably going to be a contractor, right? So we have to ask ourselves, is this an employee or is this a contractor? If they're setting their own hours, they work for other customers and clients, they're probably a contractor. If they're more exclusive to you and you direct more of what they're doing on a regular basis, then maybe an employee. Only employees need to be reported on Schedule H. Contractors, you're not doing that, right? So what we're going to do here is go through an example of Schedule H. We have a fact pattern, some of the rules here, and then we also have a Schedule H tax form here for our employer, John, and we're going to go through the elements here and how to complete this with his annual Form 1040. So if we go back to the slide here, what does John need to do if he's going to hire someone to be his full-time, household employee? Well, first thing he needs is an EIN. So EINs are generally applied for and assigned to legal entities. So if you form an LLC or a corp or a limited partnership, but you can also get an EIN if you don't have a legal entity and you're in John's position here, right? If you hire someone as an employee, you need the EIN and you can apply for one as such, right? So the EIN is going to be absolutely necessary for two reasons. One, you need to have it when you complete Schedule H, so that's a first. And then John's also going to need it to file the annual Form W-2s and W-3s with the IRS and the SSA, right? So W-2 is an annual wage and income statement. For those of you that are employees, you're familiar with this. You get that at the end of the year, which shows how much income you were paid by your employer, how much tax was taken out, and then maybe some other elements too, like 401k contributions, fringe benefits, and the like. Now, the other element here with payroll tax reporting is the Form 941s. Now, typically a business has to file these Form 941s on a quarterly basis to report the wages paid during the quarter and the taxes that are being withheld and paid to the IRS. Now, John can bypass this because he's going to be reporting all of it on Schedule H. Now, he can elect to do the Form 941s if he wants. But if he wants to keep his reporting kind of down and simple and just doing it at year end, he can just opt to report everything on Schedule H and that'll be fine. So the next item here, John, as the employer, is responsible for collecting the payroll taxes from the individual's wages and then matching it as the employer, right? So both the employee and employer portions of the payroll tax are going to be reported on Schedule H, and they're going to be paid with John's Form 1040 tax return. Okay. Now, lastly, for the state issues, John also needs to register as a Florida employer because Florida has state unemployment taxes, right? So an employer, a new one, has to pay a 2.7% tax on the first $7,000 of wages paid to Florida-based employees. Now, it's important here, every state has different SUTA or state unemployment tax requirements, so you're going to have to look at where do you live, where's your employee going to be based, and look at those local regulations as far as what are the tax rates and the wage and income thresholds for reporting. Okay, so let's look at our example here for John. John, he's living and working in Florida. He has a house there, and he's a single filing taxpayer. John's going to hire Richard to be his full-time housekeeper and look after the home, property, basically also kind of work as a groundskeeper, so he's doing a lot of tasks. Under this relationship, we are going to treat Richard as an employee, right? So he's not working for anybody else. John has greater control over his schedule, sets his hours, puts together his daily tasks, that kind of stuff, right? So we're going to treat Richard as an employee. John's going to be the employer. John agrees to pay him $15,000 per year for his services. So the employee share of the payroll taxes, 7.65% on $15K, is going to be $1,147.50, and that's what John takes out of Richard's annual paychecks, right? So Richard gets the difference there, $13,852.50. Now, John reports these wages on Schedule H when he's doing his 1040. And John, as the employer, also computes his share of the payroll taxes, which is the same amount, right? Because remember, payroll taxes, 7.65% is paid by the employee, and then the employer matches the additional 7.65%, right? So John then calculates the Florida state unemployment tax on the wages paid to Richard, right? So recall it's 2.7% in Florida for a new employer times the first $7,000 in wages paid to Richard, which is going to be $189. Then John also computes FUTA. So federal government has unemployment taxes. So the FUTA tax rate is reduced. In effect, you get a credit. So it's reduced to 0.06% if you also paid state unemployment taxes. And in this case, John did to Florida, right? So there is a SUTA credit there, and the net amount is going to be 0.06% times the 7,000. Okay, so that's the fact pattern we got in front of us. Let's jump over the form itself and go down the various pieces. So we have here, let me go to the top here. So we've got John, his 1040, right? So we got John Q taxpayer. This return very simple, where we just have wages for John, and then he's got some federal income tax withholding. But the piece we're focusing on here is the additional taxes for the Schedule H household employment piece. So we've got John Q taxpayer here. He's the employer, right? We've got his Social Security number and then the EIN that he was assigned to by the IRS. So if we start at the top here, question A, did you pay any one household employee cash, $2,200 or more? Answer is yes, right? So yes, skip lines B and C and go to 1A, right? So B and C we can skip. And now we're jumping into part 1, line 1A. So the total cash wages are going to be subject to the Social Security tax. In this case, because Richard is below the Social Security thresholds, the whole amount of his compensation is subject to SS tax and the Medicare piece. So we have $15,000 here, $15,000 here in line 3 for Medicare. So the total taxes he's paying in SS, $1,860 and then $435, right? So $2,295, and you recall the $2,295 is comprised two pieces, right? So it's $1147.50 for the employer piece, and then the same $1147.50 for the employer portion, right? So that's the match. So that's how we're arriving in total at this $2,295 number. Now, if we jump into part 2, this is where we have the federal unemployment tax piece. So question 10 is asking, do we pay unemployment contributions to only one state? Yes, we did, right? We paid it to Florida and Florida only, so we indicate yes there. And we made all of our state unemployment contributions during 2020, right? So we paid that during the 2020 year, so it was, we can say yes, we paid it before April 15th, 2021. Right, and so then it asks, were all wages that are taxable for FUTA also taxable for state unemployment tax reasons? Yes, right. In some cases, you can have compensation that isn't subject to taxes in one or the other, but in this case, it's getting the same treatment. So in Section A here, state where we paid unemployment comp, Florida, right, and then the amount of contributions we made was $189. And so now we have total cash wages subject to FUTA. Again, it's the same $7,000 threshold times the 0.6% rate, right? So $42 is going to be the federal unemployment tax piece. And then the $189 was already paid to Florida as the state unemployment tax piece. Now, Section B is done. You can leave this blank if you're completing Section A. Section B is done if you paid state unemployment taxes in a state that was subject to credit reduction. So in effect, what that means is if the state for that year had any outstanding loans to the federal government, the employers aren't allowed to get this reduced rate. They got to pay, a higher rate or a lower reduced rate. But in this case, that doesn't apply. So Florida wasn't a credit reduction state for 2020, so we're just paying this small 0.6% piece, the $42. Okay, and then in part 3 here, this is where we total everything up, right? So we had the $22.95 in Social Security and Medicare taxes, and then we're adding $42 in federal unemployment taxes, and our grand total is $2,337. Okay. Now the 2337 that is reported up here. If we scroll up here to additional taxes, Schedule 2, we have household employment taxes, right? We've attached our Schedule A. 2337 is the additional tax that John needs to pay with his tax return. And we can see that also flowing through up here, right? Line 23. So John's taxes before computing anything came out to be $39,448. Then he taxed on the household employment taxes, and now his grand total of taxes owed for the year is $41,785. He gets his W-2 withholding credits, and that's the amount he owes. So it's relatively straightforward. I think the key points that I would like to highlight here is this line item 3 right here, employee versus contractor. Be very sure to carefully analyze how you classify the worker for federal tax bases. Like I said, in most cases, it's going to be just a contract worker, so they're not an employee. But to the extent you have somebody that's regularly working on your property at your home, they really don't work anywhere else, you really do set their hours, their schedule, the tasks they need to complete. If it starts to look like you've got that level of control over the relationship, then it's an employee and you need to follow these requirements. So I hope that was helpful. If you have any questions, please leave me a comment below. Happy to help answer any I can, and I look forward to seeing you again on the next video. Thank you.